this one was 84%. That was an 84% correction. 2013, this one here was even more. This was an 86% correction. So 86 to 84. And then if we come down, say it's 2% less, say it repeats that pattern, say it's 82%. 82% would be right around 12K.
So I've got a couple of questions. Bitcoin, based on the value it is, let's open up a more open conversation around what do we think, not just Bitcoin, but the crypto market. What do you guys believe the crypto market is going to do in the next, let's say, 6 to a year from now, 6 months to a year from now? Evan, if you want to go ahead and start it off.
Yeah, I got a lot of stuff to show you to definitely answer where we could go in the next 6 months to a year. So the other thing I just updated a little. Let me show you a little scalp trade that I took, maybe a little entertaining for this stream a little. So I got the long in, and now I also added the scalp short. And what I'm looking at on the scalp short is, let me show you what I'm seeing on my 3-minute time frame trend line. So we got a bearish div as it's coming up here, and this is our spiral line right here. So we hit that point, confirmed, and we're rejecting off of it. So stop loss up here, first take profit here. So that's a possible scalp short off of that area. Now, to answer your question about what could happen in the next 6 months to a year. So what I want to show you is the weekly time frame. The weekly and the 6-day are huge. So on Market Cipher, what we have for Market Cipher here on a weekly, and I circled it here. So see these deep anchor waves with this green dot below. What you want to look for is the green dot below. And this is going to happen relatively soon here. So this was our bear market bottom in 2018. See how money flow is getting deep, and then you got the green dot. What we're getting right here is money flow is getting deep, and you're getting close. See, it's this yellow line comes up. As it crosses the 0 line, you'll get that green dot below. So probably when that happens, it would be a good shot. We have hit the bottom. Now you got to realize this could just come right back down. It could be a few months, a month or two before that happens. And we could come down quite a bit more. What I want to show you too is where we could end up. I want to kind of map it out in the 6-day. This is pretty big, and you guys might find this pretty interesting. So the 6-day, this is a bit more bearish. This means we could go, because look at it was the same green dot here in the 6-day, but it was deeper in the money flow. And if you go back to 2013 here, the 2014 bear market, this is interesting. Kind of the same thing. We had one here. That one didn't work out too well. Very similar to, see, we already had one right here. Didn't work out too well. We just came down more. The next one. Now, when did the next one happen? It was October to January, 3 months later. That would bring us all the way to September. And now we could kind of map where we could end up, because see, this dotted line right here shows us where we are in terms of money flow. You can make the argument, let's say it was a smaller market cap. Let's be more, let's say it's going to go down 44% from where we are right now, about from our wick down to, say 20K, assuming we do have some relief here at 20K, which it seems like we are. Another 45% would do around 11K. And the other thing that's interesting in the 11K mark, and at that point, you'd be very deep in the money flow here. It'd look like just like this. Another interesting point with that is we could turn on our 400 weekly moving average, which sits at right now around 14K, so general area. Also, I want to map out where our all-time high was to the bear market bottom. So this one was 84%. That was an 84% correction. 2013, this one here was even more. This was an 86% correction. So 86 to 84. And then if we come down, say it's 2% less, say it repeats that pattern, say it's 82%. 82% would be right around 12K. And then you have a lot of confluence there. See, big area at 12K. Here, 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 here. So this general area would be huge. And that would make a lot of sense. That would make a lot of sense in the technicals. When that would happen, it's about 2 or 3 months. So August, September, a bottom out at that area. Also, if you look at the S&P 500, a lot of other things where the DXY could top out, it coincides with that. So that's pretty big. Let's look at how my trades are doing right now. I'm trying to figure out. So all seem to be in the negative at the moment. This one's down 97. I'm trying to figure out which one is the long, which one is short. These two, I believe, are the long ones. Yeah, these two are, the blue is the long. And then we're kind of negative with the short right now. So the short could get stopped out. But I do think we're hitting possibly a local top at this point, and then we'll come down a bit. That's where I'm thinking to this point in the shorter term.
All right, good. Well, we'll take a look at the dashboard and take a look and see how you guys are playing out. We're going to give Peter a chance to go ahead and put in. Now, before I move to Peter, Evan, are you going to? You've added now 2 trades. Are you going to be taking on any additional trades after the discussion on Bitcoin?
No, probably not. I would probably, well, the scalp trade, there's always a scalp trade opportunity, but these trades,
Right.
I'm just going to be waiting for an outcome. So the 2 long trades, those are going to take longer. It's unlikely we're going to have an outcome on the stream. So I did the scalp trade. I want to see kind of we could possibly see at least a few $100s profit on the stream using the scalp trade if we hit that point, which we should hit that point. You know, we could hit it within a half hour. It could be a few hours though, depending. And the probability of that trade winning, I would say, is probably around 60-70% for the scalp trade. For the day trades, probably around the same area. Probably, I'd say a little bit higher, probably 80%, 80 to 90% for the longer term, the day trade, the longs.
All right, perfect. Peter, do you concur with Evan said? Are you on the same page, or what is your outlook?
I think
it's okay.
I think
challenge him. It's okay to challenge him. Just challenge him. No, I'm just kidding.
Yeah, you could disagree.
I mean, we have a very different style of trading, so it's very interesting to kind of listen to how Evan does things. As I mentioned earlier, like looking into Bitcoin, this is on a weekly chart. You can see my screen now.
Yes.
Yeah.
Okay, cool. So what I normally do is I am supply and demand trader. So as I've mentioned, when something goes up from a particular zone, I'm looking for it to come back down. And the way I'm kind of identifying in this area that this is a supply zone, before I put that there, is I can look for, so just using the weekly as an example, this works on everything from like a 1 minute to a 5 minute, and that's best traded in like London or New York sessions when there's kind of like a lot more volume in the market. So what I'm looking for is kind of a flat area where we've got a bit of indecision, and then something very big comes out of it like this. Because the only people who can really move this money or move markets like this is like institutional money. These are you know, enormous changes in market caps, etc. So this for me right here was my supply zone, and it's not always obvious to what the supply zone is when it's coming back down. So here again, we've got another supply zone. You can see we both perfectly came back into it. And so I would have been taking longs in these areas, and I would have taken a long here because it fits my criteria, because it's retesting this zone. And obviously this one would have been a losing trade, but that's why we use stop losses. But right now, because we've broken through this zone to lower levels, I'm now looking back across for existing data from all the way back here, because it doesn't really matter how long ago it was. It's come down to this level. So I'm now looking for areas in the market, and everyone's probably thinking about this high here in terms of how far it could potentially come down to. Sorry, this high back here, which was the all-time high back in December 17. But my supply zone, and I'll jump into a daily so it looks a bit clearer than it is on a weekly chart. Okay, you see when the market came up very aggressively, it's then come down and it puts in these wicks, which is again a supply zone on a smaller time frame. It comes up, it comes back down and retests again. So this whole area here shows that there's market accumulation going on. This is an accumulation zone. So if they accumulate at that price, the question I would always ask myself is, what about the other guys who missed out buying at that price? So, you know, sometimes the market and the order comes back to retest, and that's when we want to be buying. So right now is very exciting because Bitcoin is very close to getting in, and the reason, you know, we've got this 16,297, it unset down. You know, we don't have to wait for it to come perfectly to here, but anywhere, as soon as I'm seeing like higher kind of movements, I look into like a 15-minute chart and I'm starting to put in, and this for me is a good place for buying because it's an area that people were buying before, institutions were prepared to buy before. zone, I now know that when we come back into this zone, I'm going to be accumulating again. So I can then take orders. So buy limit is if the price arrives back into a place, comes back through, it's going to trigger my buy. Okay, so I'm looking for it to come down into somewhere I want to buy, and it's going to trigger my buy. So I can then stack up orders at sort of various levels. So the natural progression you would think would be, $20,000. We haven't quite got to 20. We stopped a few dollars. Dollars is a nice round number. A lot of people might have that in their mind that they're going to buy $20,000. It touches $20,000 and everyone wants to buy it. You know where it's going to go. And that was the top here. And then I can have maybe another bid slightly lower down at 19,000. So that if it does come all the way down here, it's going to trigger all my orders. But when it comes back and does this, like I've mentioned, being the most likely scenario initially, then we're all in the money because we've been triggered and we might have been asleep at the time that Bitcoin wicked all the way to the downside and we haven't missed out on that opportunity. Okay. So my first trade or my trade for today on Bitcoin will be a 20,000, got here, and I'm looking at, I haven't drawn the box quite in the right place, just the very for this here. Okay, so what's that? 895, 19,895 sat there. Okay, now obviously stop losses are important, and we've got this wick towards the downside down here. A long term buy. Doing this right now as being like a kind of a heavily leveraged trade. This would be at most a 5% leverage trade, where I'm looking to potentially back to, you don't want to over leverage. And there's no one really knows that it's not going to do this one day and come back up. And if everyone's leveraged, it increases the pain yourself if you're over leveraged. So never more than 5%. Never more than 5x at this particular level. So I can risk a 1%, and because I'm lucky where I believe the bottom of the market to be, I've then got this huge opportunity for a massive risk to reward win. Because I could hold this and I don't have to go in very big, and I've got the benefit of a massive upside. So this, I then targeted back towards this. Okay, why I've targeted that? It's come down, it's come back to retest here, and you can see if we zoom in, there's a accumulation zone on the sell, which was happening in this region.
So I guess the question here is,
where I'm prepared to...
Peter, I guess the question here is, with this big upside potential to profit on, is that going to be your strategy? Do you have that patience, that emotional control to be able to get into a trade and hold that trade for that longer period so they can go ahead and reach those targets? I mean, obviously, if the market moves very quickly to that level, it shouldn't be a problem. But if it takes time, are you going to start doubting yourself, question yourself? And if you're in the money, are you going to decide, hang on, I'm going to just take my money and not stick to the rules?
This is like a sort of, so I trade in two different ways. This is like a small position that I'm willing to open and hold for a long period of time, and how maybe when I'm buying crypto, I accumulate crypto at these levels. But when I'm day trading, I trade on, I look at an hourly chart, or 4 hours to an hour, and I identify the direction of the market. I'm looking for pullbacks. As soon as I see a pullback, then I'm looking to get in. So if we jump into, so that's if I was to be accumulating right now or buying as a general rule. Let's have a look then at a sort of a way I would normally trade, which is to identify the trend. Obviously, you can see right now that the trend is down. That doesn't automatically mean that I'm looking to go back lower, but I'm looking to see what's really happening. So really right now, I don't buy when it's breaking out towards the downside, I sell it, and when it's breaking out towards the upside, I don't buy it, but I have to wait for it to make a move in another direction. So right now we can see it's moving towards the upside. Now, if it does something like this, eventually at some point it's going to do that. And it starts to put in something like this, identifying where my kind of demand zone is, which I've already showed you on the other side. This, say, would be my demand zone. I would draw my box across like this, obviously the green box, and I'm waiting for that retest of green. I've made it red. And then this is where I go for my buy. Okay, so I buy here, and then my price target is then 3 to 1. So wherever my stop loss goes is 3 to 1. Ideally, my stop loss is as close to the bottom of the accumulation zone as possible, but always just underneath it. Never in the accumulation zone. Sorry, not the accumulation zone. Never in the demand zone, just below it.
Okay.
Make sense?
All right. Yeah, absolutely. So let's go ahead and move on to challenge number 3. Peter, are you putting any trades on Bitcoin right now?
I'm going to do it just over on
so you got
8
20,000, right? Well, current price. What's you're going to go at current price right now. So you're going to go at market.
Current price is at 20K.
Yep. And then you're going to level in on that as well.
Sorry?
You're going to level in on that position.
Yeah, well, I'm going to go for. So my risk to reward was. Bear with me. My stop loss is going to go under. I need to jump back on 4 hour. My stop loss is going to go below 19, around 19.5. So from current levels, that's going to be a current level. That's a drop of what, 1,481. So just because it's a challenge, I'm going to make it exciting. I'm going to go for a 2 Bitcoin position. And I'm going to be looking to put a buy limit in once we return to around $20,037 or around there, which is the low we just put in.
So you cost averaging in. Okay. All right. Good. All right, that's in. All right. Well, let's take a look at this scoreboard. Let's take a look and see exactly how you guys are doing now that those orders have been placed. I heard them go ding in. So they are in. Got a couple of, looks like Evan's going crazy on that side.